The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. This is June the 5th. June already. Almost half the year gone by. June the 5th, and my pleasure to be here Monday through Friday, market days. And now I will have a problem. I will not be here tomorrow. I'll be doing my opening call, and then I'll be taking the day off. And so I'm going to try to make this as comprehensive as I can. Most importantly, Draghi came out, made a statement. I'm sure most of us realize that the statement would be pretty much what he said it would be. The market, now this is going to be really interesting. I'll discuss the market aspect, and at the same time, we'll look at some key stocks. And so let me just answer this question here. And then there were two questions in the den that I thought were quite important today. One was concerning Facebook, and we'll go to that. And the other one was Dryships, D-R-Y-S, and I'll go to that. And both of them are kind of important in their own ways, all part of the market action and reaction. What I do want to do is just to run the numbers so I get that out the way. So this is at just after 11 o'clock on Thursday, 5th. And the Dow has recovered from spiking up. The futures spiked up, and they spiked down, and now they're kind of meandering at a pretty decent level considering what's going on. The Dow is up 29 at 16,767. The S&P is up 2.5 at 1930. The comp index is going to be part of the clue. The comp index is up 8, kind of within the narrow move to the upside parameter. So it's at 4260. Qs right now are up 23 cents at 91.75. I'm going to look at those charts in a moment. Let's just get this out of the way. Gold sprang back. Gold, because the dollar, how can I put this succinctly without the charts? No, I need the chart. So the dollar right now is trading at dollar DXY. Is trading down just a little bit at 80.60. What happened was there was a very sharp spike. I'm going to call that spike for now a G. If there's a new high, it's recycled higher. But just for the moment, I don't see any reason why I can't put a G and a question mark. So you know what? ABC. I'll call it, I want to be as thorough as I can. I'm calling it G/C. And I'll explain just real quickly why. Because it went to a D, there's a chance that was an instant restart. That was the high in the dollar index, 80.44 on the 23rd. On the 26th, it went to 80.43, a penny lower. That made PT. The next day was a kind of an engulfing candle, just the highs and the lows. That's all. Then it went to an E, pulled back, went to an F 4 days ago, pulled back just modestly, and today it spiked very sharply higher. But the MACD histogram is starting to decline. It's still, MACD is still good. And the stochastic is still at 84%, but it's making lower highs as the dollar index has gone to higher highs. Now, it's a very strong spike in the weekly, and that so far is a very positive sign because it says that the 80.41 200-period moving average so far has acted as a nice springboard. The day is young. We need to wait for Friday at 4 o'clock to see where the dollar closes. If it closes under 80.40, that's going to say, hey, the euro-dollar, EUR-USD currency pair had that exact opposite thing. It plunged down to a trough F. No, I can't call it a trough F. It's a leg F. If there's no new low bar by tomorrow, under 1.35022, you've now got yourself at least a trading range that says there could be good support in the 1.355 area. And if there's a bounce above the high of today of 1.36527, that's going to be important because all of a sudden you're looking at the entire candle highs of the 27th of May to the highs of the 21st of May. This is going backwards. 1.377 as possibly a trading area for at least short term. The USDJPY had done fantastically. That's the USDJPY. That's the euro. No, I didn't mean. Yes, the USD, the dollar Japanese yen currency pair. Now it's pulled back at a peak B because it's under the previous major high. Let's call it a daily major high of the second at 103.01, and right now it's trading at 102.45. What's going to be really important over the next 3 sessions is to hold 102.22. If for any reason there's another bounce, and that bounce takes the dollar Japanese yen currency pair above 102.788, that's going to be very important because it starts leg C. So that's the currency pair. Now the gold. Gold has had a nice bounce. Oh, that's how I got into this. I was talking about the dollar and the gold. The dollar stopped dead right there. It bounced very nice. Stopped at 1256.80. I'm looking at the M contract. Let me see if I can get my GCQ. Let me see if I can get this contract right here. And that is the August contract. Yeah, stopped right at the 200-period moving average. It's up 10.90 at 1255.20. This is a much-needed bounce. I'm calling it a bounce for now. 1281. Let's call it 1287. Sorry, 1278 to 1283 is the very strong resistance looking out. And that's going to be very important. Why? Because if the dollar if the dollar starts to pull back from here, in this leg, I forgot to tell you. I think I forgot to tell you what leg it was. In the daily, it is leg. Yeah, I said leg GSC, and the 120-minute chart went to an E and is pulling back very sharply. This is that rogue wave. This is a typical rogue. Pierces the previous high, gets all the bears covering. It gets the new longs, or the ones who got out, back in again. And then the very bar that takes you, there's the 120-minute chart, is also the bar that starts to fail, and that goes to a lower low and goes on its merry way to the downside. So far, the merry way is not taking out the key low of at 9:15 on the 4th. That's a few days ago at 80.48. So I'm going to be watching that real closely. But it did take it out intra-bar, but it's above it now at 80.55. The MACD is it's just okay. Stochastic is declining at 55%. So I'm going to be watching that. I think the dollar is in, at least for a sideways trading period, or it could be pulling back. So we're going to be watching. And how gold, I was thinking of buying the gold stock this morning prior to the opening. And then I thought, I need the evidence. Normally, I just jump in. I wouldn't care because the 120 chart was already starting to show some nice price movement. I felt that if this was going to be a move of substance, meaning that it's a move that takes more than 2-3 days, in fact, it could last between 9 to 15 trading sessions as a bounce, we'll have plenty of time. We wouldn't be able to pick the exact low of some of the stocks. Although the reason was, when I looked at some of these gold stocks, they had already started to move. So now let's go through different in many of the indices. I'll have an opportunity to do that now with our first caller. We've got Johan in Miami. Hi, Johan. How are you?
Hey, Basil. How are you, man?
I'm very well, thank you. And you'd like to look at
the SPX.
Okay. And you have some questions.
Yes, Basil, on the XPX, wouldn't that daily chart on the S&P, on the S&P?
Oh, yeah, on the SPX, on the index itself? Yes. I've got leg E right now.
Well,
it might.
Yeah, my question is, why wouldn't that be an EA?
Oh, I was just going to say, because of the power of the move from yesterday to today, I have no choice but to circle it. You beat me to it. I was going to say to circle it and call it a potential for an instant restart. And the reason being that, let me go through this for those people who are not familiar with my technique of the instant restart. In the Chapman wave, when the price gets to a peak D and within 3 bars with a particular configuration, and this is a perfect configuration, within 3 bars is a brand new recovery high, as long as the technicals are still good, I have no choice but to call it a potential alternate wave count. So now let me do this. I'm going to re-notate all this. I'm going to put an E/A. And one of the reasons for it is that in my Master Trader series, especially when I used to do the 2-day course with the level 1 and then level 2, or the advanced courses, I spent a lot of time discussing the characteristics of what you look for in the potential for an instant restart, and then what you look for in an instant restart that has the potential to only go up to a G and not recycle to a D, or it is potentially going to fail at an E or an F. And right now, and this is the thing that I've been talking about, one of the reasons why for my subscribers, I tightened up stops and shorts, because I thought to myself, hey, if the Dow breaks out more significantly today than just a nominal new high, and so far it's leg E in the 120-minute chart, but a new high has been established at 16,787. So I'm going to be watching this real closely, because I also have a parallel wave count there, G/C. And because of that, it says to me I might have to change the weighting in both the S&P and the Dow to make it more favorable to the new buy signal than to the old one. And I'll know by the end of the day, because I always like to say the day is young until 10 minutes to 4, even sometimes just on 4 o'clock, because we can have big moves right up until the final bell. So if I'm looking at the S&P, what is negative? Well, it's moved beautifully above the 9-period moving average. The MACD fast moving average, remember I call the 9-period differential a fast moving average because it moves quicker than the red one, which is the slow moving average. And that's still very good, and the histogram is still very strong. That's the difference, the differential between the two moving averages. And what you're looking at here is that the MACD at 98% is really fully loaded. To be able to get a pullback right now in the indices, you would need to see the stochastic start to slide to 93% and then 87%. So you brought up a fabulous point here, and that is, why is this not an instant restart? And the answer is, it absolutely has all the characteristics of an instant restart. And the whole beauty about this technique, which took me years and quite a bit of money to finally figure out, is that on the shorter term, it's a very positive action, because I don't even have to make a decision. If the candle closes somewhere around here, I don't even have to make a decision as to what it is, because it's so strong. I have to wait for a peak before I even have to make a decision whether or not it's a peak A or a peak E. And at the same time, the MACD is strong. Now I want to talk about, do you have a moment to hold on?
Yes.
Great, because I want you to talk about the 120-minute chart and put the relationship of shorter time frames to the longer time frame. I'll be back with Johan in Miami, Florida, and we're looking at a Dow that's up 53 and the S&P's up 5. Be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 50 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. So the S&P is up 5.5, and it's trading at 1933.42. This is the high of the day. We're on with Johan in Miami, Florida, and we discussed the Chapman Wave instant restart, and that's the S&P, which went to a peak D and within 3 bars with higher lows. That's always very important. Well, there are a whole bunch of techniques that apply to that. But let's just say within 3 bars, breaks to a new recovery high, and that's important because the MACD hasn't shown even a wrinkle. It didn't even acknowledge that there was a pullback. The on-balance volume did, and that's the one that says to me we're getting to a kind of a toppy area, and we're going to have to watch a bunch of things. But at this particular point, this is so far a very bullish candle. In the 120-minute chart, there was another instant restart, and this one, and one of the things you know about the instant restart is that very often it can go to an E or an F. And it doesn't mean to say that it isn't often that it happens that you can get 2 successive peak Ds in a row that restart to brand new buy modes. But in this case, the S&P has done that since the low that was achieved at 1862.36 at 1:30 on the 15th of May. You've had successively higher peaks. There's just been one jarring pullback, and that was the jarring pullback from the 19th. Was that the 19th? Yeah, on the 19th, 20th of May. We had that pullback. I think it was a Sunday, Monday. And then what happened is since then, it's basically walked the 9-period moving average. So in putting this together, what I'm looking at is there are a couple of things that would be very It might take quite a lot more points than one would want, but the only way that this is going to fail at this particular point, Johan, is if the S&P over the next 3 to 5 sessions, with only going, it's at 1930, let's call it 1934, with only going to maybe 1938 to 1941-ish, somewhere around there. Where's that? That'll be next week. So that, 1938 to 1941-ish as a maximum to the upside before there's a deeper corrective reversal underway, until the S&P breaks and closes under 1918.90. Let's call it 1990 is the 9-period exponential moving average support right now. Since it broke above, and this is the thing that had me a little bit worried why I tightened up the stops on the short positions. And one of the things is, since it broke out on the 21st of May, that's actually where we went long the QQQ series, and then we got out last Friday. That was probably a mistake because it's gone even higher. But the S&P has done the same thing. It has not even come close to the 9-period moving average. So what I'd be looking for are 2 closes out of 3 consecutive sessions under the 9-period moving average, and that's the only time that I can feel confident that we can say that there's a reversal in the trend. The reaction so far today is I'd said to subscribers 16,750s, 16,770s, and 16,790s in the Dow will be the resistance. And it's because the Dow is up 0.34 and the S&P is up 0.30%. They're kind of moving in parallel motion. So in a way, this complements what's happening in the Dow. So to your question, the answer is it's leg E/A. I might have to consider that it has a much greater, if it's only A/B, that means we're going to be rallying all the way into next week. So I don't want to get too carried away. I just want to say, MACD's good, stochastic's good, price action's good. It's way above the 9-period exponential moving. I have one indicator that says right at this point, you're starting to see one particular indicator, actually there are 2, that I was saying we're getting a little bit overextended in the very short term. It doesn't say there has to be a reversal to the downside. It just says at this point you're starting to get to an area where there could be less upside activity without a bit of a breather. That's what it's saying. So have I answered some of your questions?
Yes, Basil. Thank you so much. Could you quickly pop your chart of the ES 120 minute?
Okay, and this is the ES 120 minute chart, folks. Here we go, ES 14. Now look at this. I'm going to make this a lot bigger than it was. Okay, there are. In this particular pattern that we're looking at, there was a peak at 1927 on the 120-minute June E-mini S&P 500 future. There was a peak C1, a slightly lower high at C2, and then a slightly lower at C3. And then you got the news this morning, and what happened? It spiked to a leg D at 1934.25, plunged down to around number 1921, right on this dashed trend line that I've drawn and shown subscribers this morning. And now it's bounced and it's off the 21 low. It's at 1932. So I hope that helps you.
Yes, Basil. Thank you so much. Appreciate it.
Thank you very much for calling, Jan. Good to speak with you. Have a great day. Folks, we'll be back. Basil Chapman. We're looking at the different indices. I'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Okay, let's get to a couple of questions that I said that are kind of important to what we're looking at, even though they might feel a little esoteric. The first question was Facebook. What about Facebook? Facebook, FN, what is that? Fabrinet. Oh, that's an interesting chart. Let me just put that down. I love serendipity because it often helps in identifying stuff that you would normally not be looking at. Okay, Facebook right now is trading at 63.66. There's a Chapman wave technique that I call the falling axe. It's just merely like an ice cream cone on the side. And if the price breaks out above it, it could go 1-to-1 from the low bar to the breakout bar. And that would, either way, at this particular point, having broken the resistance, if it stays that way for the rest of the day, Facebook, FB trading at 63.65, up 31 cents, then it should be able to tackle and break above 64.30, which would give you that leg D, the missing leg D. That's number one. There were a couple of restarts that we talked about. Someone had asked about restarts. There are restarts. This is typical of your restart. If you want to look at this chart of Facebook, you'll see that there was a move to the upside that failed right there. From 55.44, it went to, on the 10th, it went to 63.18. And then it pulled back, went all the way back down to 55.88. Started another move to the upside, but that was still within the sequence of that peak A, so that goes to a B. Then it fails because it comes down and takes out the left side low bar. That becomes a B minus. B minus means that it's a failure pattern, and you've got your H that goes to an M. But remember, this is the pattern that says you can still make another M, but at some point, if the MACD and stochastic start to improve, it's a very powerful pattern that should take you quickly way above the left side arch as well. There was a peak A, became an A minus because it pulled all the way back, went to an A, then a B, C, and now it can start the D. But we still haven't got the powerful move. So that's saying that Goldman Sachs is kind of being forced up. It isn't doing what normally would happen under this restart situation in the Chapman wave. So if you're in it, fine. I would just say if you're in it, I'd put a stop at around about 61.17 on some part of the position, because if it takes that out, it could pull back quite a bit sharper. But rallying right now with the XLF moving up is important, because if Goldman Sachs starts to lag, it could impact a little bit the XLF, which is the S&P Select Spider Financial. Now the weekly chart has gone to a leg A. If it goes above 64.30, that's only 80 cents above where it is now, by tomorrow afternoon at 4 o'clock, that'll extend leg A. But so far, the weekly price is acting very well with 61.19, the 9-period moving average support in the weekly chart. But did I say Goldman Sachs? I mean, I don't know why I keep saying that. It's Facebook we're looking at. Facebook. Okay, so Facebook at this particular point is the one that I'm looking at. It won't help the XLF. It'll just help Facebook. But it's one of the momentum stocks. And if it breaks above 64.30, that starts leg D. The next thing is the monthly chart has only got a peak C. I'm expecting at some point that Facebook actually goes above 72.59 for leg D. Will it be in this phase? Is this really telling us about this particular period, that no matter what anybody says, this market's going high? You've just got too many countries that are just lowering rates, and that money is going to filter everywhere. I'll talk about that a little bit more, but we've got a caller right now. We've got Rob in Los Angeles. Hi, Rob. How are you?
Hey, Basil. How you doing today?
Very well, thank you.
I'd like to take a look at the Mankind.
Oh, you know, I don't know how many times I've notated. I haven't got the notation here for some reason. I just keep seeing this go by on the ticker every couple of months. You'll see this MNKD go flying by the ticker, and it's having a big move to the upside, and then you forget about it, and in the period you've forgotten about it, it's had a really big move to the downside. It's given up all the gains, and then the next time you see it, it's one of those big moves to the upside. This is the biotech, right? MANNKIND Corporation. I've got it in E. It's also could be an instant restart, just as we saw before. So I'm going to call it F/B in the daily. I'm going to ask you in a second whether or not you have any position at all in this, but that's only brand new leg A in the weekly. That's the way this thing works. It's either feast or famine. Okay, so give me 1 second here. I need to just find the lowest low bar to start the count. Now, while I'm doing that, I'm going to ask you, do you have any position in this? And is it stock that you obviously, because you mentioned it, it's something that you've probably followed previously, but do you have a position in it?
Yes, I do. I have some call options, like November 10 strike. I bought it when the stock was around 9.
Okay, so you bought it when the stock was around 9. In the interim, because you've got the call options, you've been up and down and everywhere, right?
Yeah, today especially.
Okay, so this is what I'm going to do. Two things right now. First of all, when you're in a position, it doesn't matter whether it's a stock or an option in the future, whatever it is, and the price does not go commensurate with what your original plan was, and you've seen a percentage decline that is greater than you were, even on a stop that you would have put in, it's greater than that, and now you're saying to yourself, oh my goodness, I don't know what to do. Then you have no choice but to do one of two things. If it gets back to break even, or it goes above your price so that you have a gain, I find, at least for my way of trading, I don't do it often, but once in a while, I'll just sit with something saying, I have conviction in it. I didn't use the stop I should have had. But I still believe it's going to go my way. But if it goes my way, when it gets back to even, what I do is I just immediately get out of the whole position, and then I come back in, even if it's 3 minutes later, because that's a completely fresh thing. I really put in a stop. I do a whole bunch of things that I should have done in the beginning, and I promise myself I won't sit through that kind of pain again on that particular stock. So that's the one thing. The other is I immediately set a stop that is locked. It's just absolutely locked in, that if I'm not taking anything off, or if I only take a little bit off, that stop says if it goes back down again, I'm out of this at that particular price, because if it goes down again, it's given me an opportunity to get out, and I never took it. It will not give me that opportunity again. So now my question to you is, are you seeing a gain in the position that you had? Or you have?
Well, I still have a gain now, but I had a bigger gain earlier.
You mean earlier in the day?
It was at 11, now it's 10:13.
Okay. So what I'm looking at here is, I really don't want to tell you to get out of a position that has the potential to go much higher, because if you ask me fresh right now, there's a stock called Mankind Corporation, MKD, trading at $10.12, down 42 cents. It made a recovery high. I wonder if that's an all-time high. No, it made a recovery high today. All-time high is somewhere in the 2431 area, but you can see by this chart, it has massive quick moves to the upside, and then it is dull. Not only is it dull, but it gives back a huge amount of the gains. It's really it's a scary stock. So let me just look at my 120-minute chart. Okay, very good. We're just finding some support. I'm going to make two suggestions. I don't know, do you have calls or a call? Do you have a position that you can split it, or you can with it?
Yes, I have maybe 40 calls.
Oh, okay. If you have that many, I'm going to make the suggestion to you right now that you take something off. If you don't take 20 off, you take at least 15. Right now, as we're speaking, as it's got a little bit of a bounce, because you're going to get back some of the premium real quickly. So that's what I'm going to suggest to you. I'm just going to do the 2-minute chart on this, because I want to see, is there potential for it? Oh, no. Yeah, right now, I would do that. And the other thing that I would do is I would start to take a little bit more off if it gets down to it's at $10.11. If today it gets to $9.98, somewhere around $9.98 to $9.95, I would then take another little bit off. Now I'm sitting with a position where I've got profits, I've done some nice money management, and I've got a little bit of a cushion, and the cushion says, I don't think you can, because of the way you mentioned it to me, I'm not sure you'd be happy if I said to you that this could pull back to 920, because 914 is the 9-period moving average support. It could even pull back to 865 and then consolidate and then have another sharp move to the upside. And I don't know if you want to sit through that, so I'm suggesting that you do take some profits right now. Now, technically, I've got some signs that say it could pull back a little further, but the price is the arbiter of the trend. So the technicals say, hey, it's a little bit overbought, but you know what? It could hang around between 10.03 and 10.34 for a couple of days before it either pulls back or it tries to retest the high. That's the reason why I say I'd like you to keep some of your position, but I absolutely would take some profits right now, because it's done a spectacular move on the daily, very quick, C to D to E to this F/B, if that's an instant start. You would love to have this as an instant restart, and then you can hold half of your position even longer. But I would also treat them as you're not in the long position, you're in calls, and those you're dealing only in premium right now. And that premium, I don't have to tell you how quickly that can dissipate. So that's my recommendation. Take at least, 10 to 15 off right now, and then another portion of it has a fairly tight stop towards somewhere where the lows are today, and that's money that you might want to have ready, because if it starts to test the low nines and then starts to make a cup formation and gets ready for a retest of the highs, you can go right back in with a much better position price-wise. So I hope that helps you. But chart-wise, I just want to tell you that so far everything is very positive. It's the speed that it's gone up, and I know the stock, it has speed coming down. I just don't want you to be involved the way it had gone before when it went down. So that's the only thing I'm thinking of. If you're holding the stock, I'd merely say take something off, and at between 1920 to 1865, I'd look to put that back. But we're different. We're talking about call options. There's a different thing with the premium.
Okay, thank you, Basil. That was very helpful.
Okay, so good luck with it, and let me know how it goes.
Okay.
Thank you very much for calling. I appreciate that. That's Rob in Los Angeles, California. We're looking at Mankind. What was it called again? Mankind Corporation. And I believe it's in the biotech area. It looks like a biotech stock. So now let's go back. So we've got Facebook. And what I'm saying with Facebook is that I'm suspecting that Facebook is going to make a leg D. In the weekly chart, if all of next week Facebook doesn't break 61.20, but instead starts to trade towards 65.21 to 65.90, wow, that U pattern that we've seen so often, that could be a cup formation or a U pattern, and it could start to move back, and it could even in the month of June start to get close to the all-time high of 72.59. Only reason why I'm saying it is because it held beautifully the 9-period moving average in the monthly. It's back above the 9-period moving average in the weekly, and so far the technicals in the daily are still very strong. So it's actually nice looking. So that was the question in the den. Now the next one is very interesting, DRYs, DRY. Many of us have traded this periodically in and out. This is a stock that it's almost like something that you just want to buy and hold and say, hey, it has very big spikes and it has big pullbacks. I just want to trade the big spike. Right now it's got the big spike. This is leg C. It's trading at 3.21 DRYS, up 11 cents. And it was looking terrible just 3 days ago, and this is the way it works. Now, the reason why I said market-wise I was interested in looking at Facebook was because it's part of the momentum group. The reason why I was interested in looking at DRYs, it's part of what was the ailing shipping area, and that the dry ships have been just dull. I mean, nothing going on. And now all of a sudden, whoops. All of a sudden they're coming alive. And that coming alive is important. So we've got 312, 315. So this is leg B in the weekly chart. And I like it right now. And I would say that if you're in it, I would have a small position if you're in it. And I would look to holding at 321. It must hold 306. If it breaks under 306 in the next few days, that's going to be very negative. But if this, and I think it's DSX, I'm just guessing now, I haven't looked at it right. DSX is the other, Diana Shipping. It's acting quite well here. It's up 17 cents. Yeah, that's another one that's waking up. So yeah, if the shippers start to move here, that's going to be important because it's saying that underlying the economy, now you're starting to see the shippers move. And I like that. I like it when the shippers move because it means we're shipping goods. And in this particular instance, let's look at NAT, another one, NAT, which is always in trouble. Yeah, it's also moving higher. So I'm going to come back and I'm going to do a wrap-up because tomorrow I will not be here. So I'll do a wrap-up for tomorrow's show if they need to use it, and I'll explain what I'm looking at, why I'm looking at it, and what is working and what's not working. We'll be right back.
Take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus documents contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tech Technicians. Dow is actually up 83 and S&P is up 9.5. This is a very important moment here. We've discussed before that how bonds act, how the dollar acts, how gold reacts, how all these different things, how the volatility index acts is going to be very important today. And so far, we've seen a positive breakout. Now, the question was on Goldman Sachs, and I'll do that together with the XLF because it's a very important period. Goldman Sachs trading at 162.83, up 44 cents. And not that great, but it is moving higher. Walking the 9-period moving average finally looks to me like it's going to break above 163.43 for leg D. The 200, this is the 30, this is the 200-period, simple moving average. Right there, 163.94 would be the resistance, but so far it's being dragged up by the others. So if you're long, just make sure that you put a stop on some part of your position. It's 161. Maybe I'll give it a little room. Say just below 159, I'd take off something because that's starting to fail. But absolutely, if it goes above 163.43, that's leg D, and then some party position, I would just raise my stop on it. Most importantly, what I want you to do is to say the XLF. You see, the rotational aspect is my big issue here has been, how does this particular phase where there are so many charts that are saying, wow, we are overextended. As long as we keep rotating into other areas, you can have a high-level consolidation, or you can even have a consolidation that's unfolding with higher highs. You cannot rule that out. Look at the XLF. Only in leg C broke out after the daily had this whole series of failure patterns. It went to a D, but it just made an arch and kept failing, but it never took out the 21.19 low. It's only $1.25, $1.50 above that level right now. That's not a big rally, 5% or something. I'm looking at this and I'm saying, wow, if the XLF is able to climb, it's going to be the rotation. Look, when you get a stock, I was asked yesterday about BMY, which is Bristol Myers. Look, that's doing the exact opposite. It is failing. It's made left side, right side time price failure pattern. So within the context, remember I spent some time talking about that staple upside down like a Head and Shoulders. Well, it's taken out the low. It better get right back into the 48.52 area rather than breaking to a lower low than 46.30 this morning. If it takes that lower low out, that's going to be very negative. So it's a rotational market. So let me just run this again. The IYT, that's the transports, made a peak E 3 days ago at 146.34. If it takes that out, it might there again be a recycle to the upside. Now, it doesn't mean to say that we aren't getting kind of toppy, but it means we haven't topped out yet. And the MACD and stochastic are just accelerating now on the weekly chart. So if the IYT next week takes out, it's at 146.16. If for any reason it takes out 144 support, that's going to be very negative. So those are the levels that I'd be looking at least for support. The IYR, which is the U.S. REITs. What a candle this is. Look at that candle. The F/C breaking out. I have to tell. There's that U-shaped pattern that I was talking about in Facebook. It's the same pattern. They're seeing so many of them retracing back to the most recent lows. So IYR, no signal yet. I thought there was yesterday. No signal. Let's look at the VIX index, VIX.X. VIX index down at the 1161 area. Couldn't even get to the 1240s. That's amazing. So on a weekly basis, that 11, the whole 11s is the area where we've seen before where reversals have taken place. We're going to be watching this like a hawk next week. Why? Because you've got, at this particular point, a situation where it constantly gets repelled by the 9-period moving average in the weekly chart. Here we go. Before you go to Larry Pesavento, I'm sure it'll be a great show with Larry coming up and shows all the way through. I will not be here tomorrow, so we might be replaying this. All I can say is that watch the Dow. We're in the 16,800s now. Holding 16,700 is very important over the next two sessions. So far, this is very good action. So, check out my opening call.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.